Stocks recapture key level in a steep bounce this week. High yield bonds are at 52-week highs and are leading the stocks. This is very good news. I'll explain why. I think we can expect sideways to possibly slightly down action in the next few days because this advance was quite steep, so a pause of some sort is quite likely. I'll also show a trade I'm actually in still right now for Intel. It was a picture perfect trade, and we'll finish up with gold, which is likely benefit even further from the dollar pullback. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, November 3rd, 2023. As always, hit the like button, subscribe to the channel, share this video. These actions are what keeps this channel going. Truly, thank you for all of your support. If you are a subscriber, stay tuned. We'll cover many stocks and various ETFs, such as country ETFs, materials, energy, discretionary, S&P 500. We'll also cover some of the large cap stocks like Apple, Salesforce, Cisco. We will also cover some gold-related stocks, as well as some of the speculative stocks, such as CarGurus, NeoGenomics, Cloudflare, Nano Dimensions, Roku, Shopify, etc. If you are not yet a subscriber, consider signing up by going to the description of this video. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart. They're the green, blue, red, and yellow lines. As you can see, S&P 500, this is S&P 500 on the daily time frame, daily meaning each candlestick is a day's worth of activity. Daily candlestick is now or the price is now above this blue support resistance line. So blue line is kind of like a place where I want to be buying. In fact, I am actually long. I bought S&P 500 ETF SPY recently. I bought it a little bit earlier. I bought it actually on October 23rd, right there. And today it reached my target. So at this point I will move my stop to entry. My stop was initially at the yellow line here, but my target has been reached, so I can safely move my stop to entry without being afraid that I'll get stopped out prematurely. The reason why this chart looks somewhat different than the S&P 500 itself is because S&P 500 ETF SPY has dividends added back into the price. Notice where I'm hovering here, it says ADJ, it means adjusted. If I uncheck that, it will look exactly like S&P 500 ETF index. But I like to add the dividends back into the price, and with dividends today my price target was reached, and I am going to move my stop to entry. So this is basically the way I trade. We buy and close above the blue line, put our initial stop below the yellow line. Once our target is reached, we move our stop to entry. This maneuver guarantees you very high success rate, above 70, close to 80% already. The rest is psychology of trading, as well as price control, or rather control of risk. But looking back at this chart, S&P 500 index, notice that we are once again above the blue line. We can also look on the weekly chart. This is S&P 500 SPX on weekly chart. Notice this giant, big green stick. All right, as they say, size matters, and this size of this candle is enormous. Let me look how big it is. Basically this is showing you that throughout the week nothing but buying took place. It's a 5.4% candlestick, and the closest one I see on this chart is back in November, and it is smaller. So this is the biggest candlestick in about a year, I would say, if not more. This shows a tremendous amount of buying. Okay, a lot of interest in buying stocks, a lot of interest in owning stocks. Okay, yes, we pulled back from 52-week highs. This is 52-week highs here in July. We continued, we pulled back in this wave-like fashion. This is a very bullish candle. I would be expecting 52-week highs sometime in the near term. Not only because of the way stocks are acting, but also the way junk debt, high yield bonds are acting. So here is the junk debt, JNK, again on daily time frame. I'm gonna kind of make it a little bit more obvious. So once again, this is JNK with dividends. Here on the right side here it says ADJ, it's adjusted for dividends. If I unchecked it, the chart looks totally different. We're like very close to the lows, all right? But this high yield bond, it's high yield bond for a reason. It yields a lot of dividend or coupon. So we add the dividend yield into the price. We are at 52-week highs, okay? So I'm gonna kind of zoom out a little bit and show you what it looks like. So bonds broke out, or the junk debt broke out back here in February. See, it closed above the blue spot resistance line. Before that, it was downtrending. It was trending down, and we would have been. You could sell short junk debt, but it's just not a good idea because of the high yield component. So yeah, this downward facing arrows just show that you could have done it, but they're purple in color, so we didn't actually open any positions on the downside. However, once they broke out into a new uptrend, and the only thing I need to know is, did they close above my blue line? Yes, this has happened right there on 1st of February. That's all we really need to know. And therefore, at this point, we will say, okay, we're only going to be thinking about buying. We're thinking about only buying. So this pullback, this high was back on September 1st. And basically, we've been just kind of pulling back. We bottomed exactly where I wanted it to bottom, right around the blue line. And surged. Look at this 3-day non-stop buying, or 4-day even. Started on 31st of October, kind of mildly, and then big, nice candlestick on the 1st of November, a gap, and a run higher on the 2nd of November, Thursday, and another gap today, and a push to 52-week high. So today high was at 91.26. Previous high was at 91.25. Yeah, I know it's by 1 penny, but it is nevertheless a new 52-week high. What does that mean? It means that in this case, not only we're in an uptrend for stocks, junk debt, high yield bonds, this ETF, GNK, you can also look at HYG, it doesn't really make any difference. Same general principle. I just like GNK because it's a funny name. It made a 52-week high. High yield bonds and stocks, generally speaking, correlate quite highly. They do the same thing more or less in vast majority of cases. So when high yield bonds are moving higher, stocks are most likely going to follow them higher. In fact, what's happening right now, we have high yield bonds leading stocks. 52-week highs already for high yield bonds, but stocks are not nearly yet at 52-week highs. We're still, we need to keep going, are almost 6% to new 52-week highs. So to me, this is a really, really good news. When high yield bonds are moving higher ahead of stocks, this sets up a bullish divergence, a divergence that favors an uptrend for stocks. So overall, I'm very pleased with the way things are going. I just want to show you high yield bonds. There's JNK on the weekly time frame. And again, look at the giant, I would almost call it Dixinormous candle. And the last time something like this happened was back in May. I mean, enormous really candle, but this is really very bullish. And not only that, we're closing, we just made new 52-week highs. So very, very important, that both stocks and high yield bonds are moving higher. Good news all around. Very briefly, I wanted to show you how to trade using my indicators on intraday charts. So this is a 15-minute chart. Okay. Now, when you trade intraday, make sure you're using a continuous security. So notice what I'm using here. I'm using SPX 500, which is a CFD, contract for difference. Okay, it's free on the tradingview.com. So make sure you use this particular symbol if you're going to trade intraday. Don't use SPY. Okay, I'm going to show you why you shouldn't use SPY. Okay, notice all of those gaps. See all of those gaps. Intraday, you might as well just turn off my indicators. There's nothing. It doesn't make any sense. Okay, so make sure you're using SPX 500 as your as a intraday trading vehicle. So this is a 15-minute chart, and I'll show you how it looks like. There it is. So back here, this is October 30th. Remember, this is an intraday 15-minute chart, so there's some of this could be happening during the night. But there's the initial breakout that occurred at 1 p.m. California time, I believe. It's California time in New York. It's New York time, 1 p.m. New York time. There's the big breakout. Okay, so initial breakout, then a small pullback and an opportunity to buy again. Where are we buying? We're buying right around the blue line. Okay, you need my indicators for that, so you can find out more about them by going to the description of this video. Buy, and do nothing. Just sit in the position. And notice at this move. Sometimes things like this happen. I mean, it's beautiful. Yeah, if you can catch something like this, and let's say you're using S&P 500 contract for difference, this thing, SPX 500, to use my indicators to graph, but instead of using this contract for difference, which is actually not available in the United States for trading purposes, this is only available for graphing purposes. But let's say you buy option, S&P 500 ETF SPY option here, and then I'll buy them, I don't know, a few months out, like 4 months out or so. This could be easily several 100%. Okay, so this is how you can trade using my indicators, using intraday charts. And I wanted to highlight a trade. We are open. I am personally open this. I just bought it myself. So this is Intel Corporation. I bought it right before the earnings, right there on Monday, 23rd of October. Why did I buy it there? So, first of all, how do I know the stock is in an uptrend? I don't. I really don't know anything. So, let's just pretend that we're back here in March of 2023, and notice that this stock is below the yellow line. So 100% it is not in an uptrend. Okay, it is in a downtrend here. Okay, so if you want us to do that, you can sell it short around the red line. We didn't really do that. We were just waiting for it to break out, and there's the breakout. This is the initial breakout that occurred on 13th of June of this year. It kind of surged and kind of pulled back, traded around the blue line. Notice this white arrow. These are actually my positions. I opened and then I got stopped out. Again, I opened in August and I got, it's a decent run, and again I got stopped out. Finally, right here, I opened yet again on the 23rd of October at 34.97, so right around the blue line. Okay, I know nothing about anything. I don't really follow the earnings. I mean, earnings apparently turned out really good, but I don't really care about that. All I needed to know is where is the stock in relation to my blue line. Okay, once the stock pulled back towards the blue line, I bought it right there, put my stop initially at the yellow line, so I don't get stopped out prematurely. My target was reached just a few days later, and I moved my stop to entry. So currently, I cannot lose money because I am already, we're already well past my target. So my stop is at entry or slightly above it, just to make sure I don't lose money. Okay. The way things are looking, it's quite possible we will take out this high that occurred here on 12th of September. If we take out this high, how high can Intel go? Well, we can look back, and I don't see really an upside limit, but at the very least this lows here from March 2022, so we're looking at like 42 or so. So from here on probably another 15% at least, I would say. But if it breaks out, the stock will breaks. It already has broken out above the blue line. If it breaks out above the previous highs, then I don't really know if I even want to sell it. I just want to kind of sit on it and wait. I mean, like I just showed you for this example, the 15-minute chart. Notice how high it went. Every time we pulled back, we just kept making new highs. So this is a strong trend. And it does look like Intel is about to enter that strong trend, so I'm going to be sitting in the position for a while, unless, of course, I get stopped out, which can happen, but at least I won't lose money on this trade. So this is how we trade stocks and how I trade stocks. Let's move along. This is dollar currency index. So I believe, let me see when I did this. On 20th of October, I drew in this line. You can kind of see that's this white line with kind of circles, bluish circles. This was my prediction of what the price action would look like. So on October 20th, I said that we're going to rise into early November. We're doing exactly that. And then we're going to kind of pull back in a relatively sharp manner. We're doing exactly that. I think we will continue to pull back into November. So this is the dollar. The reason why I was saying that is because notice my indicators are projected forward here. Back on October 20th here, I was projecting this into the future, and I was just saying, okay, most likely we're going to move higher, and then we're going to follow this blue line, and so far we're doing pretty much that. So most likely what's going to happen is we're going to continue pulling back into mid-November to early December, bottom out sometime there, and then move higher again, because dollar right now is in an uptrend. However, dollar being in an uptrend doesn't mean we don't have any pullbacks. So right now we're getting that pullback. Why do I care about dollars? Because we do trade gold. So right now you're looking at gold. So XAU USD gold divided by US dollar. Okay. The bottom part of this equation is the chart that I just showed you, US dollar. So if the US dollar is going to get even weaker, okay, so let me backtrack a little bit. Up till very recently, actually that's the run that started back in July, up until very recently, dollar has been appreciating, okay? And gold has been under pressure as a result. So you can kind of see that since July, gold has been kind of pulling back and actually made a lower low here in October. But then gold turned around, and this is despite, dollar was really kind of doing nothing, was sort of just trading sideways, and apparently gold took advantage of that and rallied, sharply. Also, this is around the time where Israel was hit with the terrorist attacks in Gaza. Okay, this is October 2nd, October 7th. Gold has been on a tear as a safe haven asset. So right now, gold or rather dollar is going to be pulling back, and like I said, if this bottom part of this equation will be getting smaller, weaker, it should make gold even stronger. All right, this is important, so bear with me. Let's look at gold on a weekly chart now. So each candlestick is a week's worth of activity. I've shown this chart again in the past. I'm going to turn off the indicators. They are not really necessary here. I'm only trying to make a point that if dollar pulls back, and there's a good chance of dollar pulling back into November, December, gold might take advantage of it even further and continue higher towards the all-time highs of about 2077. So this is an all-time high that was made back in August 2020. That high is 2075. Okay, so if we break out above 2075, especially if we close above that level, on a weekly basis, most likely we're going to see a significant move higher for gold, which would be more or less equal to the depth of this pattern. So this pattern, I've shown it in the past. I'm going to draw it in again. So there is that pattern. You can call it possible triple top. Again, if we break out above this level, the depth of this pattern is around 25% or so, so it's easily going to be duplicated on the upside. So gold at 2,500 is not out of the question at all. And this could happen as early as mid 2024 to late 2024, just depending on how fast things unravel, if they even unravel. Gold, obviously is a safe haven asset. So if things get badly out of control in the Middle East, especially, gold could be looked at as a potential good thing to own. So this is basically what we have so far. Again, to recap, I think stocks are in an uptrend. It is very likely we will be at least attempting to make 52-week highs for stocks. Reason being is because junk debt high yield bonds are already at 52-week highs, and this is, in my opinion, very good news. It's leading the stock market higher. And like I said, dollar most likely will be pulling back, which should help gold to move even higher from here. That's it for this week's recap. Head over to masterchartstrading.com, click on sign up for one of the products. So again, I have 2 products and one bundle. So trading indicators are these lines in the chart. You can trade, again, pretty much anything on most time frames. I can explain exactly which securities to trade on which time frames. So that's the trading indicators. They're available for tradingview.com. This is a tradingview.com interface. You don't need to have a paid TradingView account. You need only a free TradingView account. Once you sign up on TradingView, I will open the door for you. Once you sign up on my site at $29.95 per month, I think it's a very good deal. It will simplify your trading. Newsletters, I send out daily alerts about various securities that we trade. So for example, this week we will be discussing and also each week Friday I send out a weekly members only video. So for example, this week I'll be talking about all of these various securities, lots of ETFs and large cap stocks, gold related, as well as some of the speculative stocks as well. And I think the best deal, of course, is to get both trading indicators and newsletters at $59.95 per month. I think it's a very good deal. Again, thank you for watching. Please don't forget to hit the like button, subscribe to this channel, share this video, and I'll talk to you again next week. Thank you and have another great trading week. Bye-bye.